Crypto can absolutely be part of a beginner portfolio in 2026, but the goal with your first $1,000 should be survival and learning, not chasing 100x memes. This playbook walks through 5 of the safest, most accessible ways to get crypto exposure using December 2025 data, plus clear steps, realistic projections, and beginner-friendly tools. Thinking about putting your first $1,000 into crypto in 2026, but terrified of getting wrecked? You're not alone. In this video, you'll see 5 of the safest, beginner-friendly ways to invest exactly $1,000 into crypto. We'll talk Bitcoin, Ethereum, Layer 2s, regulated ETFs, and even a yield play, plus realistic 5- and 10-year outcomes, not fantasy numbers. If you want a crypto plan you can sleep on at night, this is your beginner's playbook. Welcome back to the channel, it's Yield Zap Pro. Our goal is to help normal people build long-term wealth with clear, simple strategies. Important disclaimer, crypto is extremely volatile. Never invest more than you can afford to lose. Not financial advice. Always do your own research. With that said, if you're serious about putting your first $1,000 into crypto in 2026, here are the 5 safest, most beginner-friendly ways to do it. Number 5. Regulated Bitcoin ETF ThinkSpot. Bitcoin ETFs that hold Bitcoin on your behalf and trade like a stock. These are designed for investors who want Bitcoin exposure without dealing with wallets and self-custody. Name plus ticker, example. A US-listed spot, Bitcoin ETF. Check your broker for the specific products available in 2026. Current price/entry point. The ETF share price will closely track Bitcoin's price divided by its share structure. With Bitcoin around the mid-$80,000 to low $90,000 on December 1st, 2025, many spot ETFs trade in the tens of dollars per share. Why it's beginner safe in 2026. Held in a standard brokerage account under existing securities regulations. No need to manage private keys or wallets. Backed by custodians and subject to reporting requirements, which reduces some operational risks. Realistic 5-year and 10-year return range on the underlying Bitcoin. Conservative 5-year to 2030. Flat to 2 times. Price between roughly current levels and approximately 2 times. Optimistic 5-year 3 to 5 times if adoption, ETFs, and macro trends stay favorable. Conservative 10-year to 2035, 2 to 4 times. Optimistic 10-year, 5 to 10 times plus in very bullish institutional scenarios. Some forecasts talk about much higher, but those are extreme. A Bitcoin ETF is like a Bitcoin stock you can buy in a normal brokerage account without ever touching actual coins. It's the lowest friction way to get Bitcoin exposure if you're already comfortable buying ETFs and don't want to learn crypto infrastructure on day one. You still ride Bitcoin's price swings. 50 to 70% drops have happened before, so while the structure is safer, the asset is still extremely volatile. Open a brokerage account you already know, Fidelity, Schwab, etc. Search for a spot Bitcoin ETF, check the expense ratio, and use a small test buy, like $100, before committing the full $1,000. Number 4. Ethereum, ETH. Name plus ticker, Ethereum, ETH. Current price/entry point, around $2,993 per ETH as of December 1st, 2025, according to YCharts data sourced from CoinGecko. Why it's beginner safe in 2026. Ethereum is the leading smart contract platform by total value locked developer activity and DeFi NFT usage. It has moved to proof of stake, significantly cutting energy use and enabling staking yields via validators and liquid staking systems. Many regulators and institutions treat ETH as one of the more established crypto assets, with futures and ETFs being discussed or launched in multiple regions. Ethereum is like a global smart app store where developers deploy financial apps, games, and digital contracts that live on-chain. If you believe crypto will be more than just digital gold, Ethereum is still the most battle-tested way to bet on that future. Fees, competition from other chains, and regulatory decisions could all slow adoption or push users to alternatives over the next decade. Create an account on a major exchange like Coinbase or Kraken, buy $100 to $200 of ETH first, then move a small test amount into a simple mobile wallet, like an official or reputable wallet, to practice self-custody before deploying the full $1,000. Number 3. Bitcoin, BTC, name plus ticker, Bitcoin, BTC. Current price, entry point. CoinGecko data shows Bitcoin trading around $85,000 to $90,000 on December 1st, 2025, with a snapshot listing one BTC approximately $85,461 and recent closes near $90,000. Bitcoin remains the largest crypto by market cap and has the longest track record, with institutional adoption, ETFs, and corporate treasuries increasing over time. It's simpler than DeFi tokens. No. Complex protocol changes for beginners to track. Just a capped supply and a well-understood monetary schedule. A growing number of regulated exchanges and custodians support compliant Bitcoin access and storage. Bitcoin is like internet gold, a scarce digital asset people hold as a long-term store of value rather than a high-tech app platform. If you only pick one crypto for your first $1,000, Bitcoin is still the most straightforward, widely adopted, and researched choice. Price can crash 50 to 80% during bear markets. Governments could restrict usage, and there's always a chance that a better store of value technology or global policy shift weakens demand. On a major regulated exchange, use a recurring buy of $100 to $200 in BTC for a few weeks to average in, then decide how much of your full $1,000 you want to keep on the exchange versus a hardware or mobile wallet. Number 2. Ethereum Layer 2. Stablecoin yield. Here, think of a major Ethereum Layer 2, like a well-established roll-up with strong TVL, or a high-quality stablecoin yield product that sits on top of Ethereum's ecosystem and is tracked by on-chain analytics platforms. Name plus ticker. Example, a leading Ethereum Layer 2 token or a regulated stablecoin yield product run by a major exchange or fintech. Current price/entry point. Layer 2 tokens typically trade in the $1 to $10+ range. Stablecoin yields are often quoted as an annual percentage, e.g. 3 to 6% APY, on top of USD-pegged assets. Reputable L2s are where much of Ethereum's DeFi and NFT traffic is moving, due to cheaper fees and high throughput. Stablecoin yield programs from major platforms emphasize regulated, capital-efficient lending or money market-like structures, often with clear risk disclosures. A Layer 2 or stablecoin yield play is like investing in the roads and bridges of Ethereum, or renting out your digital dollars for interest, rather than betting only on volatile coins. It gives beginners a way to participate in Ethereum's growth or earn yield on stablecoins without going deep into complex DeFi strategies. Smart contract bugs, protocol changes, regulatory crackdowns on yield products, or a loss of the peg for stablecoins can all lead to permanent loss, not just price volatility. Use a major exchange or fintech that clearly labels its stablecoin yield or L2 staking features. Start with a small amount like $50 to $100 and read the risk disclosures before committing more of your $1,000. Number 1. Regulated crypto. Basket. Institutional-grade product. This is your true beginner safety-first option, a diversified, institutionally managed crypto product like a professionally managed trust or basket fund that holds a mix of Bitcoin, Ethereum, and possibly a handful of large-cap assets. Name plus type. A regulated multi-asset crypto fund or trust from an institutional manager. Examples include products from Grayscale, Bitwise, or similar firms, depending on what's available in your region in 2026. Usually trades like a stock or ETF with a share price aligned to the net asset value of the underlying crypto basket. Minimum to buy is typically the price of one share. Some platforms allow fractional share purchases. Diversified across several major coins, reducing single asset risk. Managed and custodied by institutional providers with compliance, reporting, and audits. Accessible through standard brokerage accounts or retirement accounts, depending on the product. Realistic 5-year and 10-year return range. Conservative 5-year, 1 to 3 times, if the basket behaves like a weighted mix of BTC ETH with some drag from smaller assets. Optimistic 5-year, 3 to 5 times in a strong crypto bull phase. Conservative 10-year, 3 to 5 times. Optimistic 10-year, 5 to 8 times plus if crypto broadly continues to grow and institutional adoption deepens. A regulated crypto basket is like an index fund for crypto. Someone else picks and manages a mix of the biggest coins for you. For a beginner who wants exposure but doesn't want to pick winners, this is the closest thing to a set it and forget it crypto solution currently available. You still face full crypto market volatility, plus potential management fees, tracking error, and regulatory changes that could affect how the product operates. In your brokerage or retirement account, search for a crypto index or digital asset fund from a major provider. Read the fact sheet to understand holdings and fees. Then start with $200 to $500 before scaling up toward your full $1,000 allocation. How to get started. 1. Pick your front door. For ETFs and baskets, a mainstream broker you already trust. For coins, a reputable centralized exchange with strong compliance and security. 2. Decide your split of the $1,000 up front. For example, just a sample plan. $300 in a regulated crypto basket, $250 in Bitcoin, $250 in Ethereum, $200 in a stablecoin yield or L2 play. 3. Use dollar cost averaging if you're nervous. Spread your buys over 4 to 8 weeks instead of going all in on one day. Common mistakes to avoid. Putting 100% of your net worth in crypto just because you saw a hype video. Using leverage or margin as a beginner. Leaving large amounts on small, unregulated exchanges. Panic selling after a big dip instead of sticking to a plan. Buying random meme coins with no research because of social media. If you've watched this far, you're already ahead of most people who jump into crypto blind. Your first $1,000 should be about learning, surviving the volatility, and building a foundation you can add to later, not hitting the lottery. If you were starting fresh in 2026, how would you split $1,000 between Bitcoin, Ethereum, and everything else? Drop your plan in the comments, and feel free to come back in a year and see how it did. If this beginner's playbook helped you, please hit that like button, subscribe, and tap the notification bell so you don't miss the next deep dive. Thanks for watching, and invest safely.